All right, terrible music. Jeez, that was a bad selection. Anyway, I tried for ominous. I didn't have a lot of time. If anyone has musical talent, for the love of God, please send me some music. I'm pretty limited. I keep getting copyright stricken, so my choices are whatever you guys want to put together. All right. So yesterday we did a little live stream, and some of it was like right on schedule. We were talking about this expansion happening for sure. I can actually just get rid of the Bollinger Band stuff, right? Because it did come to fruition, and it seemed like on every time frame that that was going to happen, and it broke out. We'll talk about a few different things, what we got right, what we got wrong, etc. Obviously, I mean, I don't think there was anyone that was seeing anything that was super bullish, right? We've been talking about it forever, anyone that's been listening. Anything that was related to 10.2 and below was going to be dump susceptible, right? So at this time, let me get rid of this nonsense, make this a little bit bigger. There was never a doubt. I mean, basically, once we're under 10.2, we're only looking for the possibility of dumps. There was no situation of, hey, we might just burst out. In fact, if we were going to break up from that level, it was something to be short. Instead, you would need it to show some positive reaction, excuse me, some positive price action to lead in there and then break out to be something sustainable. Otherwise, I would have shorted a run that would have went back from, let's say, if we dropped into this 9.6 area and then automatically popped back up to that 10.2 area, that would be something to short as opposed to long. So instead, we had the short signal as we discussed right here. I mean, this is the one, I'll tell you what, this is what I got wrong, right? I didn't get it wrong in that, obviously, I've been saying that relentlessly for a month, right? Under 10.2 is dump susceptible for sure. But then we had, obviously, this is my own indicators just making fun of me saying short, 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 short. And what I got wrong myself is that this one right here, I mean, this is the ultimate signal, right? You end up getting a rally, you push off that, 9,500 level up into that 10.2, 10.3 region that we always talk about. Perfect rejection here at the 200, even if you didn't short that level, right? So you show rejection. You wait a little bit, you get a little you get a bear cross here on the 4-hour rejection. Not good. Even if you waited even more to the signal to get yourself into a position to where you now are in the bear control zone. Good, perfect, right there. It was just signal after signal after signal. So where I failed is that when we were late into this process, my thought process was, well, yeah, we're dump susceptible for sure, but I'm thinking, well, we'll probably get a little fake out bounce and then drop. Now, I will tell you this much. When this was going on, basically we're talking about late in the weekend, or excuse me, early in the weekend. I was just had things I was doing, so I wasn't paying too much attention to it. So I don't feel that bad about it. But the reason why it hurts a little bit more is that when you when you have a hodl position of some sort, basically it's more important for me to not miss the shorts, right? So I mean, I played shorts in here, but those were little ones. Like I'll play a short from, let's say it was from there to there, or a couple in here, whatever it might be on an intraday basis, but did not have that head short that I would like to have in this situation. So for me, that's a miss. I just have to face that reality. So good analysis, bad trade execution, and that's okay. It happens. But to get into where we are, I mean, the one good thing that's happened, we dumped out. I mean, this was just disgusting, nasty dump out. Everything you would expect from a long pattern. Another one thing we did do pretty well. We talked about it yesterday in the live stream, right? We said this was it. I mean, it was literally on its last leg when we were having the live stream, and we actually went back and pinpointed the actual spot and said, wow, okay, that's it. We're basically here. I think I mentioned we don't know if this guy, when I say this guy, I just mean that this particular spot, whether it has the need to buy one Bitcoin or 100 or 1,000 or etc. We just didn't know, but it was the absolute last straw, and we just nailed that to the bone, right? You bounced one time, dumped out of it, etc. I would have liked to seen this one give a little harder fake out bounce. Would have been a little bit easier to play, but obviously it didn't work out that way. But the signal was pretty clear the whole way through. I keep hearing people talk about how bullish everyone is. I don't know anyone. I mean, I just don't know anyone that was like, hey, we're going to rock it out over here. I mean, I know having the mentality of saying, look, this can play out X or this can play out Y, and I'm going to even talk about some of that today. But I don't know anyone that was looking at price action that was just literally dropping off of a cliff. If we go into something like a 1 hour, it's a little easier to see. I don't know anyone that said, oh yeah, this is awesome. We hit this huge resistance and just bled completely out. And yeah, this is super bullish. No, nobody I know said that. Even the guys that were bullish in these regions, they were bullish probably for good reason up in here, right? So you had a nice corrective structure. You impulsed out. Hey, maybe we'll build on something. That's the idea. Correct a little bit more, build out, because you were right here you were running out of room, right? We posted that recently. Hey, things were just basically running out of space. It had to go one way or the other. And again, while this was bleeding out, nobody that I know was saying we're going to the moon, we're breaking out, we're going to bust out to 12,000 now. It was always a semblance of, hey, if we see something like this that basically begins to march on, then that can become a possibility. The other thing we did talk about, though, is that, all right, well, what if it gets complicated? Because right now, what you have, we'll go out even a little bit further. The descending triangle breaks down, right? So you get the natural action of that pattern in that forget all this for a moment, but that's basically just weekly stuff, so I'll show you that in a minute. But you have the pattern, obviously, the bouncing ball look, right? Skimming a rock on the water, right? And it bounces and it bounces, and eventually the rock falls under, right? So that's traditional look of what a descending triangle is meant to be, and that's fairly obvious. But the idea here is that now that you have that breakdown, the question is, where do we go from here? Well, keep in mind, guys, I mean, if we're going to talk about things like measured moves, we have a long way to drop, right? Now, we don't know if we're going to continue to go down. We'll talk about some of that as well. But, even taking a very vague estimate, you're talking about getting into that 6,000, low 6,000 type region if you're going to trust something like a measured move off of that. So if you see people talking about those type of numbers and they seem like they know what they're talking about, then they're talking probably about measured moves, which is fair. I mean, look, the formation is what it is. What happens, problem with measured moves is we get into another conversation about, well, what was the formation, right? Because I could look at this formation as this, right? But maybe the real coil was from here to here. And that, yeah, you know what? This was the lead in. And so maybe things were bearish, right? We had an ABC type correction, and then you had a little bit of a dead cat, and then come back for a touch, and then another touch, a touch, and then drop, right? So if this is your formation, then it changes obviously your measured move. That's why all of these things, even the stuff we're going to talk about today, are a lot easier to do in hindsight. That's trading. In hindsight, you should be just a baller, right? So that would make probably the high 7,000 region, and who's to say that that's not the best way to go about it, right? Or the other way would be like, okay, yeah, it had a descending characteristic. There's no doubt about it. I would absolutely classify that as a descending triangle. But within that pattern was what? A symmetrical, right? There's no doubt about that. This was a higher low, higher low again, right? So you can't deny that had a symmetrical feeling to it. So if that's the case, so if that symmetrical is inside of that, and you take this position like this, well, then your starting point is going to be a little bit higher, and that puts your measured move a little bit higher as well. Again, these things don't even matter ultimately in the way we're trading things. I mean, I'm assuming that you're not taking a massive pattern like this and saying, hey, I'm going to play it to exactly the measured move, because that would be a little bit silly. When the price action gets there, you're going to evaluate it and kind of go from there. But The next question is, let me actually clear some of this off, and I'll bring it back when I need to. But uh, the next thing we were going to say is, where are we going? Well, remember, we had this bear channel, right? So the bear channel is actually alive and well. I prefer, let me just hide this stuff for a little bit. Okay. The bear channel is actually alive and well, and we're bouncing off of the midpoint, right? So let me show you what I mean. So you see this here? This is the channel we established a long time ago. That's the one we're very confident in, right? Bounced off the middle line, bounced off the middle line. We know that when it's under the middle line, we saw that weakness. We saw rejection there. When it got above, it was pretty strong. So, you get these formations. They're intriguing, but obviously if you lose this middle, even worse, right? So yeah, can we see much lower numbers? Absolutely. Once you see that, that opens the door to all kinds of things. It's not that scenario anymore. I'm sure I even spoke about yesterday of the fact like, hey, until we break the 21 week, right, which I will bring up back now, which is, this will allow you to overlay like a weekly. So this was the 21 week right there. And look, I'm fine with what I said, which is until that was broken and really on close. So technically, look, it's not the end of the week. It's intra candle, just like this candle broke the triangle low. This, you've seen candles that broke the closing low here many times. 1, 2, 3, 4, you know, at least, well, I'm sorry. So here was the closing low, and then you had 1, 2, 3, 4, 5, 6. Some of these were barely, but still 7, 8. Call it 8 minimum breaks of this closing low for the possibility of a lower low, right? But it didn't hold. So if you sold or shorted any one of those 7 breaks, you did terrible, right? Because price ran and ran and ran and ran and ran and ran. So granted, this is a very terrible, ugly looking candle that probably has a very low probability of ending up positive, but low probability doesn't mean it cannot, right? So there is that chance. We'll talk about it, right? That chance of it bouncing back and holding the 21 week, and then suddenly on a weekly scale, things look very different. You're going to be in a different situation where you say, well, wait a second, we just took a very ugly formation, which is damn ugly as we stand right here now. So we're not trying to frame this any other way. But basically, if you regain that, okay, it's like a recapture play that basically would look like a hunt on a high scale. That would change the way I would view things for sure. But at the moment, I'm just going to continue to do what I've been doing, which is let's look at what's in front of us, right? And what's in front of us is absolute bearishness, right? So how do we play something like this? Well, first and foremost, you don't need to, right? You don't have to play something like this. It's wild. It's something that's all over the place. I mean, we see a little bit of a rally going right now as we're speaking here. We're going to see how this handles. I'll try to keep you updated as we go along, but if you need to play it, feel free. But the idea is we're in a zone, so I'll try to make this quick considering the situation. You're in this, we set a nice clean zone, right? I actually like it better on the 4-hour, right? So if we go into the 4-hour, we come down, we see a few different things. So basically, I have a few different levels mapped out again, which is going from the high fake out, basically that last little leg up all the way to this recent low. Then I'm going to take just the dump candle here to the low, and then ultimately the most recent range from where we bottomed to this top. Okay, so those are the only 3 things I'm looking at. And I'm going to basically put myself into a position to where I say, all right, first and foremost, same type of thought process. Anytime you're under that 0.236, you're bear susceptible, right? You're in a position to where you absolutely can find yourself going lower. We could see much lower numbers, right? This is the 55 week. It's a target, right? I mean, we basically were under this 34 week, which is a little bit worrisome. And you're in a position to where you have to regain it, which it has at the very moment, but you would like to see at least a 4-hour close above that, and you want to see this thing start to work up. Now, the thought process is this on the 4-hour: if you can get a candle close above it. Now, we're talking about big if stuff, right? They're not gonna give it to them, but if they take it, suddenly the story becomes very interesting, right? Because now you're talking about most likely a good test of this 9200 range, which is right in with where the 21 week is now, and you can have that type of conversation of a capture. Now, technically, you would want to break this high, which is 87.98, but my guess is if you're closing a 4-hour at least above the 85.92 level, you're probably going to go for that anyway. So that's basically the range that we're working in. It's pretty clean, but everything is still dump susceptible. So what does that mean? So if you go to a low time frame, and there's only one way at this point, unless you were in early and you're just monitoring your position. I had a couple of shorts today, very low time frame stuff. You have to basically go down to something like a 15-minute, and you're going to look for overbought scenarios, right? So 15-minute overbought, it's a short, right? This is what, some bearish divergence off that or some weakness off that. You get a short off of that, right? So let's zoom in just to kind of get an idea. Just like that, right? Right here again, couldn't make it. possibly a short, probably on a 5-10 minute, etc. Get to the overbought scenario, that's a short, right? So, and they're pretty easy type of plays, right? Now, do you short them while they're creeping up? No, because that's when they might make the run. If we go to the 5 minute, which I've been watching closely here, we just kind of made that leap, right? So you have to be a little bit careful because they'll reach up, and that's typically the time over while it's topping out. That's when it's going to try to make that reach above that 200 and kind of take away that scenario of thinking overbought, oversold. I mean, I hate that word anyway, but you get the point. Overextend it or looking for a short, because even on the 5 minute, that would have worked absolutely perfectly as long as you were under these levels. So look, 5 minute, if you entered in here, you can see what happens. Weakness comes. And by the way, who's playing a 5 minute chart? I'm not. But the point is, just to give you an understanding, you get to that oversold, ideal spot for a short. Get to the oversold, overbought scenario or overextended, much better word. You see what happens. And then, of course, these weaker ones that don't even make it in the bear control zone they're crossing, those are actually giving you the real strong signals on such a low time frame. And that has worked over. I only took 2 of them myself, but that worked over and over and over and over and over and over again, right? Scenario here, would you have gotten in on that? No, absolutely not. You would have waited. Now, would you short that? No. Now you got to wait. What's going to happen with these 200s, right? So we'll kind of get a look, move to a higher time frame. If you don't know how to do any of this stuff, don't just start trying it, by the way. I'm just giving you guys a look. Most of the people, obviously, that are under me have a good idea about this because we are teaching it. So don't just decide that you're going to jump into it. It's not necessary at all. I'm just giving you guys a look of how you would play the price action and try to get a read on the market. But besides that, then it's just stepping up next level, right? Low time frame March. This stuff is very orderly. Markets are very orderly. It would really shock you at how orderly it is if you don't understand how trading works. You're going to see this on all time frames, right? Again and again and again and again and again. And what are you doing, right? Is it, oh, that this is the best indicator ever? No. It's just that you basically have a direction, right? The trend is down. So you're shorting strength, right? That's the idea. But not very strong strength. You're shorting what? Overextended strength. There's a difference there, right? So that's the idea. When strength starts to look strong, no, get away, right? So this little red line is a little indication for you of, hey, you know what? I'm creeping up on strength. Now, that's not happening right now. That's why you're seeing a rejection. So on that level, again, if someone decided to find a short on that position, they wouldn't just do it here. You're going to actually let some time expire, let it roll over a little bit, etc. But that's how you're playing those shorts. And the way I'm doing it is I'm trying to find exposure, right? I'm not going to be watching this 24 hours a day. So if she dumps overnight, that sucks for me, right? I would assume that if it's going to break out, my guess is, don't quote me on it, I could absolutely be wrong, I would think that it's going to break out to the upside during market hours so we wouldn't have another gap to fill. But not break down. Breakdown could happen anytime, day or night, because it's very reasonable to then backfill on a future short, right? So that's something I wouldn't say that can happen 24 hours a day. But I would think, again, I'm going to say it, and it's probably going to break out at midnight my time, but it's normally going to operate during futures hours, right? During the CME type hours, so you don't have that gap. So not much more time on the clock for today. We'll see. I do see some scenarios. I mean, if you get into like a 1 hour, this setup's not the worst ever. I mean, actually, it's pretty decent if you were going to talk about something trying to work. It's just that the low time frames are going to have to recycle a few times, so it has to really get into gear, and then you need to find a situation to where a couple of those low time frames push at the same time, right? So that you can make a run to put yourself in a position to where you're not so terribly overextended, right? Because the 1 hour has one hell of a gas to make. You're talking about really getting up there. Or what happens is you can let this position build out more. Again, it's dump susceptible while it's in there. That's the fear. How many people are buying? How many people are trying to build a hodl position? Is there enough supply here or not? Supply runs out. Guess what? We're going lower. You'll have price discovery. So that's very, very real. Again, I like this better even on the 4 hour. So we have to see how long can we build it out. I don't know. If it lasts till tomorrow, that's a positive sign. It's probably a positive, very positive sign. I mean, this formation, again, it's not the worst formation in the world. I like a little bit of geometry on my Stoke, right? So, I mean, I'm good with that. I actually see that as a possibility. Now, you're still hanging out pretty low in these zones, but seeing something like that occur is like, hey, you have a chance for sure. We just have to see if it can push on through and what kind of volume comes in at those levels, or is there a lot of sells that are waiting? Because look, if I was pretty confident that, hey, this has no chance, these are spots that make a lot of sense for a reshort, right? Looking at that midpoint, that 87, 90 type range, the top of these wicks, it's very normal action. You see smart money. Smart money is a term, right? So it's not like a bunch of guys get on the phone and they say, hey, all right, guys, we're the smart money. We got this, don't worry. But the idea of smart money, again, it's like a hindsight type of scenario. It's like, all right, well, let's say this is going to break down. All right, well, if it's going to break down, well, then after that, we're going to say the smart money was shorting it basically in the upper half of this particular region, right? But it's a hindsight scenario again, right? So we're going to say that in hindsight that, yeah, this is what happened. These guys were shorting, dumb money pushed it up, they shorted down, eventually it dumped. And that's kind of the mindset of how that works. But again, it's hindsight. For all we know, this is the real smart money, right? It holds. They fill their bags, supply dries up, and you end up with some kind of time frame where you got a bullish engulfing and it's everyone's partying and happy again. At the moment, nobody's doing that, right? You have this ominous 15 look on the fear and greed index, and does this mean that we're going to rally? Not that alone, definitely not, because it should be at 15, right? We just dumped out. So the idea though is, if today, let's say we somehow just go sideways and you see another one of those, or it actually goes even lower, well, then you could start to build a case to say, well, wait a second, they're getting more fearful, but the price action actually is showing me something different. So that's when you can begin to kind of form an argument. But right now, don't get too cute. Unfortunately, you either have to stay out, right, or play this on a low time frame and watch it like a hawk. In my opinion, there's not an in between unless you're taking, utilizing some good risk management to say, hey, look, I'm gonna, set my stops way down or way up, depending if you're going long or short, and put yourself into a position where you say, I'm willing to lose X amount because I believe, I'm willing to drop $800,000 on a huge candle because I do believe the upside is 3,000 or something along those lines. If you trade that way, God bless you. That's up to you. I'm not opposed to it, but this is a good example of what we talked about a little bit earlier. So once you kind of gain that zone, this is a good sign. Actually, this is actually the first time that the 5-minute, that's how bearish things have been. We're talking about the first time that the 5-minute has gained a level like this. So guess what? Giving it right back underneath here probably wouldn't be so hot, right? So that's going to be important to kind of watch and see where we're at. It has to deal with this heated situation. So is it either going to flex? It can, now it can basically, if it wants, flex for a little bit longer. But again, normal action would be what? This guy trying to get a little bit of a breather, and then if the 5-minute wants to flex, it will go again. So again, you're not going to learn that overnight. So if you've never seen anything like that before, don't worry about it just now. As far as questions about courses, I don't do a course. I mean, what I do is a mentorship. It's interactive. It's a lot of lessons, a lot of videos. Really talk about how everything works in terms of the markets, teach you how to do it yourself. It takes time. It's not easy. Markets are very hard. They say it's like 3,000 to 10,000 hours of mastery. That really depends. I've seen some people come in and yeah, they do get it pretty quick because they probably had a good base. Some people are just completely lost. God bless them. And I got to tell you, I have the best group in the world. These guys are the most patient people ever, and they seem to have an understanding for that. So I'm not trying to do an advertisement. I just saw the question. So if something like that, just DM me on Twitter. If I don't answer, it's just DMs get flooded sometimes, so I may not see it. Feel free to bump it, and let's just have an actual direct conversation with each other, see if it makes sense for you, and if not, we can try to point you in the right direction regardless, okay? But I don't want to turn these into like infomercials. In fact, those are, I do, what I would like to do, man, the infomercials on YouTube are funny. I think I want to do like a parody on like maybe all of them. It's unbelievable. If I show you this setup, you can make 3 trades, and those 3 trades will each make $500. You could do it 3 times a day. I mean, I don't even understand where they get this stuff, man. It's unbelievable. And that's all it takes. And by the way, this guy has this system. For some reason, it only works for $500 each trade. And for another reason is he knows it always works 100% of the time, and he wants to share that information. God bless him. He's very interesting. So let me tell you something. TA doesn't work 100% of the time. TA is not binary, right? The idea is to create an edge. So people say, oh, why would you tell people or teach people? Well, I'm just teaching them how to read the markets, how to find an edge, right? It still takes time, even after I teach it. I can show it and you'll understand it and be like, oh, that makes perfect sense. And then when you try to do it, not as easy, right? So the idea there is to show you that, hey, yes, you can create an edge. You can use good risk management. And then the process is really up to you. I'm there to guide you, etc. But ultimately, it's not going to be easy by any stretch of the imagination. Anyone selling you on that is full of crap. Anyone that says, hey, look, this indicator is absolute gold, even the indicators that I utilize as part of my system, they're not signals that you just buy and sell. It's part of a system that you have to utilize and learn how to execute to then try to be profitable from there. It's to take someone that's a wreck and make them profitable, and that's it. It's not geared to any magic pill. There is no scenario where you get an indicator that someone made and it's just gives you such an edge. It doesn't make any sense. If that was the case, you just plug it into a computer and you're a billionaire in a few days. I mean, it doesn't work that way. There has to be a human element to it. That's just the reality of how it works. So anyway, getting back to the point, way off subject there. Somehow I went to an infomercial when I said I wouldn't, so let's go back to where we're at. So, what I do want to talk about is the fact that you guys have an understanding. I did figure, since we did get a little movement there, let me talk about the here and now. But I do want to talk about the signs, right? We got some signs of this. It wasn't like it didn't hit us out the blue. Because, look, I try to be as open-minded as possible to the bull side. I always do that. Just, last year I put out videos, guys. It's not like the toot my horn type of thing, but I put out videos many months before the dump, which was saying 70% chance we're going to dump to 3,500, and here's why, and this is the exact line that it's going to dump on, and here's the moving average that it's going to dump on. We just had a different setup here where we didn't have that one moving average that I felt was going to hold us. It was something I was doing the stair step, so I couldn't give that exact type of prediction. But my point in making is that even there, it was very obvious that it was bearish, but I would still show, like, hey, look, 70% down for sure because of the circumstance, but hey, there is a possibility, which is what? It's a possibility to look something like this. You end up rolling up, right? You see like an SOS. What's an SOS? Like a sign of strength where price suddenly can't go down. I mean, I don't understand the guys with the crystal balls. Like, you should absolutely know. Why should I know? I mean, I don't get that. Did they know that we were going from 3,100 to 14,000? I guess so. I don't know. I mean, I didn't know that. I was saying we're going to 9,800 and people thought I was insane. I'm talking about my closest friends. When we did this on this day, I'm saying 9,800 is my number. They thought I was crazy. And it wasn't that I was like, hey, yeah, we're going to 9,800. What I did actually, I said, hey, guys, let's start thinking about extreme numbers, because this was so extreme. We need to begin thinking out of the box and look for an extreme number. And that number was 9,800, right? We went to 14,000, right? So that's incredible. The point I'm making is see different scenarios in your mind so that you can play this last one, right? So let's just say that I was just gung-ho that we were never getting past 7. We get here at 8. I don't think about playing this next leg up, which was the biggest one. No, I can tell you that I played every bit of this. Now, so far, I had a part of this here, right? I had a nice part of this here, and my people know that I was able to get this really just perfect on a low time frame. Started as something small, was able to build and really rode it out. Had a couple plays here and there, not a lot of trades. I mean, I probably went down to like 12 trades in this whole process. I probably averaged 15 a day during this process, right? Because it was just more complicated. So ultimately, when you get into the situation, it's more complicated. Maybe some guys were more active in there and they did very well. I ended up having a real high hit rate, but didn't make a tremendous amount of money. I didn't lose money in this round. I mean, I didn't have a lot of losses either, and that doesn't make me special. It just ended up that way, right? The read I was getting, I was looking for something, and it didn't happen. Now, I do want to say, how do we get here and what were the signs? That's kind of what my point was. So first and foremost, when you start to break down, part of the process was this. You're getting overextended is like a better word for it, right? So you can see every time we had that breakdown, we were overextended. Then you start breaking down again, but still you were overextended, right? You break down again, you might think, oh, that's what you want to be, but there's a little bit of a difference to it. I mean, if I'm trying to think, maybe something like, it doesn't matter what you use, but let's use something like a MACD, right? Again, I'm not a huge MACD fan for anyone that knows me, but I am a fan of like the MACD histogram. Fan is the wrong word, but I don't mind the histogram, so let's just take off that. I mean, what's the idea here? Okay. Basically, why do I bring that up? So you're in a situation to where what? You end up coming into this hot, right? Look at how hot this was. You're in a momentum stage that's extended already. You might think like, oh, whoa, the momentum is high, so I'm going to break through. No. It's the opposite. When the momentum is strong, you're not breaking that barrier. It's unlikely, right? So it bounces, right? So even here, though, you're still within that same leg. It didn't have enough room to shrink down. So same thing occurs next time. By the way, on the way up, same thing. You were too heated, right? So we got really heated here. You end up stopping. There wasn't a set zone. And then on this situation, this was like just a dead cat bounce off there. But then here again, heated, heated, heated. And by the way, if we go to a lower time frame, we'll find that this was too heated as well. Just take my word for it. But anyway, go in here, same thing. You're heated. You see the momentum from here to here is pretty similar, right? It didn't really shrink down much. So you had a hell of a lot of momentum that made for a great trade, by the way. So if you were long going with the trend, you did well. And it basically just had no juice. It couldn't get past a major resistance because it was coming in too hot. Same thing here. You came down. Look, that's still high momentum. If you don't believe me, look at the past. You don't even need to see the chart. Look at how small the momentum was back here. Okay? Nothing, nothing, nothing. So then you end up having the breakout. The breakout happens on low momentum, guys. Okay? So that's the scenario. So finally it's coiling, 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 coiling. Now what do you see? Oh, momentum's dying out. And you end up in this situation to where we know there's going to be an explosion because there's no momentum. So it's regardless of which way, right? Maybe we don't know the direction. Now things started to look very terrible again. But then once it goes, now it's starting from a position of no momentum, and it has the ability to flush on through. So that's the mindset to understand as to how and the why it happens. Ultimately, we just have to kind of concentrate and realize that, hey, hot momentum, it's probably unlikely we're going to break that resistance. We have to come into it and take our time and basically breathe in. So in this situation, what ends up happening, uh-oh, did I lose it? You probably did. Let me see if I can get it back. Push the wrong button. Okay. This is the one I wanted. Okay. Now we came in. The breakdown happened before we got into the zone. And now technically, once you break down like this, there's a higher probability of them actually hanging out. You see, it hasn't hung out here. But if you go back to like bear market territory, you see these much longer stretches hanging out in that overextended type of zone, right? But I don't know, right? I don't know because I know this. I know the 3-day. 3-day don't like to hang out in that zone unless it's in a deep bear market, right? Even early on in that bear, you kind of flashed in. So this would be pretty ugly. Even dumping down there would do it. So we'll see. If this dumps down, we're basically going to go much deeper for sure. That would mean probably dropping this level all the way here. But there is anyone that's kind of given that the thought process to take it along. Again, you got to do it on a low time frame. You have to have it lead into something bigger. But I understand that thought process. I'm not totally against it. Here's the problem. I'm going to clear everything right now. So here's the big problem with this. This thing came in. Now the futures looks different, but it came in. These are a mix of the 200s, right? So I have 200 EMA, 200 SMA. I like to look at my 200s in pairs because I find them both relevant to traders. And you end up holding the SMA, losing the EMA. Eesh. Now I'm going to show you futures real quick, and then we'll just pop right back. Good old futures, a very different chart, right? So on futures, first of all, it's not open 7 days a week, right? So everything's different. All the EMAs are different. The history is different. It doesn't have a lot of history, etc. But a lot of people probably trust this guy more, and I understand why. But regardless, you're in a position here to where it closes a gap, holds the 200s here, right? That's interesting. Not only did it hold the 200, if we bring up something like a big boy 377, which is something that professionals will utilize as like a bear bull flip. Like you see a lot of pros and equities, they utilize that as a flip. I mean, you want to give me if I could think of an example, well, I don't want to pop around with too many examples, but if you look at some different equities, you'll find that a lot, that they'll come in. They're not always like bounce lines all the time. You don't see like the pure rejection, but you'll see price will come in, traverse around it a lot. It's like a cycle, more like a cycle line than anything else. And then if you start living under it, bad news, right? So same scenario here. It's actually a pretty decent setup in that you have that 200, your 377 in proper alignment. Be more bearish if they flipped, right? So it took it a while to come up. Now we didn't have a 377 because of history, but it took it a while to get up past it. At the moment, you have price testing these levels and rejecting. So the futures looks different, but I still have to play spot for what it is. But this looks more positive and more promising at the moment than we do on spot. But look, we got to deal with spot because it is what it is. So I don't want to say, hey, that looks great, and then really this is the one we're supposed to look at. I don't know the answer to that. What I do know is that this is more dicey, right? Hold this, I would have been thinking like, hey, all right, much better, but it just didn't happen. And I can show you why it didn't happen if we go to like that 1 minute. I mean, I know it's a very low time frame, but unbelievable. This was the time frame that you would have been looking at if you were playing this guy yesterday. So I did get a little play in. Got very fortunate, right? I'll show you where I got the signal. Where was it? Right here, right? So I got this signal right here, and I was able to get a little piece, just throwing a little piece in there. Price went up a little, went actually further than this, but I had to snap out right back around 8,500, so I didn't get out very well. But the point is, it was a little play, wasn't anything relatively close to what the dump was. So again, I consider yesterday a miss in the way I played it. But the idea is, if you ended up getting in on this on that 1 minute, then you have to, excuse me, that's why I'm looking at the wrong thing. Oh, wrong chart. 1 minute. So if you ended up getting here on this 1 minute, it started to get pretty extended. Like you thought there was a chance in here, but I can basically show you the same exact range. We just talked about this 5 minute making that cross, so there's some interesting things going on right now. But the 5 minute, so remember I showed you the 1 minute was looking better, but look at the 5 minute, it was coming into these 55s. Believe it or not, man, this stuff is all orderly on all time frames, so it just had too far to leap. Really, this 5 minute needed to get up to 9,200 to have that fresh breath of air. And I know I was talking to a couple of you guys in Discord, in which we discussed and said, I don't know, man, it would have to really leap to get there. It just wasn't looking like it was going to happen in such a dramatic V fashion, and it didn't. So you basically had some scary overnight positions. You had some shorts, and I say overnight for me, I'm in the States on the East Coast, but the idea is, so far, it's trying, but dump susceptible for sure. Again, it's going to have to take these things out time frame by time frame by time frame. In the best way to do that ultimately would be one felt leap, right? We'll see. We're going to see if it happens anytime tonight, then obviously that means it's going to happen on a lower time frame, like a 15-minute or 30-minute. If some more time can pass, I still don't see it. It's going to happen in a low time frame no matter what, because I'm just looking at these levels here. Even by tomorrow, if this thing was, you go another, 24 hours, let's say, or even another 18 hours, I mean, this thing's not getting down very far. No matter what, you're going to end up in a position where a low time frame is going to have to crack and just take off like a rocket. So it's not easy, that's for sure. Okay, so let's talk about some other things real quick. I'm going to switch gears a little bit and kind of get into, again, more of the how and the why and these type of things. We talked about this a little bit yesterday, but I'll recap it because, look, the funding argument is legit. It's an argument that sometimes I don't like to hear. I don't like the thought of it that just follow funding. It's a mental block in my mind. I have good reasons for it. Too long to explain it, but look, was funding outrageous? No, it was outrageous near the top, right? But it's been so positive for so long. You're in a situation to where this is a lot of money being spent on a descending triangle type of situation, right here especially, right? So near that top, they pumped it up. That gave you some more reason to not go in. So when you start seeing that go, basically it's a sign again. And I speak to some people, and they've been very adamant about, like, look, man, that's the best sign for longs and shorts, and they're right. They bring up a valid point. I can't deny that this is basically, if you trust it, and unfortunately that's everything in crypto. Do we trust it? But if I trust it, if I trust that they're running this algo right, it's basically supposed to just balance longs and shorts out. If too many people are long, they're supposed to pay for it a little bit. And then what happens is price will make you pay even more. Like, so you want to stay bullish all this time, right? You're losing money. What happens? I mean, just think about it. If you're sitting there bleeding, right? So this is bleeding people out. So now I'm in these positions. I'm basically underwater, right? I'm long. Think about it. You start going long here, as an example. Anyway, maybe you get a little taste. Let's start here. Let's make it the worst case scenario. So you're long here. Oh, here we go. We're gonna do it. Drop. Oh wait, I'll survive. It's gonna happen. Don't worry. Okay. Well, here you are. You're paying. Basically, all for about 2 periods. You have paid up until this point to be long, right? And on top of that, you're getting buried. Price might have been a 10.6 at that entry, and now you're $1,000 lower. So real life example, right? You're bleeding out in the forest for 2 weeks. Same scenario here, 3 weeks, right? You're sitting there bleeding. It's gonna be a lot easier to kill you, right? So that's kind of the idea, and then just dump on you, shake some weak hands, etc. It's not even a weak spot. It's weak. You're talking about. I'm showing you the funding here. Obviously, I'm on Bitstamp, but you get the point. This is MEX funding. I should have clarified that, so I apologize. Yeah, the Arthur signal, exactly, guys. But I understand it. It's not Arthur sitting there pushing a button. It's a complex algo. It makes sense. It would be problematic for him to not follow such a thing, because you probably be able to find it in the TA because there's nothing happened technically that didn't make sense, right? There's nothing in here where you go, oh, that didn't make sense. There was times where you had traversion, basically just where things like the moving average just don't take place, which is very normal. I mean, ultimately, when you're in a tightening pattern, you're not really expecting it, and then eventually they'll start to come in line again. You'll see some resistance come in. That certainly happened there. Once they start rejecting, you got a rejection, a fallout, a confirmation rejection, a dump. I mean, that's very clean. Okay, hold on a second. Let's see. Nope. Okay. Very clean in terms of how that looks. So the funding's a big issue. How long does that take to turn around? If it does turn around, I mean, you could see also that you ended up getting the dump. Funding was down, and then look, people are right back to being long again. So yeah, it's a little bit. If you're a bull, I mean, it's a little bit worrisome, right? I would say. I mean, people are apparently bullish. I don't know if I'm not on Twitter enough. I don't know if Twitter is maybe the worst way to look at it. I mean, whatever it is, I haven't seen that, right? I've only seen bearishness. Yes, things are obviously bearish, so it makes me kind of naturally think like, hey, I should look at some bullish options as well, just in case, because everything seems bearish, right? This thing's been bearish, so basically we're saying like, hey, all of these guys have been dead on for all this time. I mean, it makes sense. The price action, I've said that, hey, don't use the fear and greed as a counter because technically, look, price has also been following that fear and greed. You don't want, what you want is, again, I mentioned this earlier, you would want a situation where this chart, let me try to give it a better signal here. Let's give me a better lineup, where this chart really doesn't match this chart, right? So when we've seen some of that basically in here where I'm not going to bring them both up to, but basically you ended up bursting out, and then the fear was unbelievable in here. It didn't make any sense at all. We just rocketed it, 20 something percent. We're going sideways, right? This is a sign of strength, is what it is. And there was huge fear instantly, like right on this dump. You had massive fear. Thank you. They collected. This is a huge accumulation. Look at this. They were getting paid, by the way, in this position. Oh, excuse me. That's right. It's the opposite. Forgive me. So this is actually a good example. You end up in a situation to show. This shows you the fear. These guys are short. Look at this. Short, 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 short. And that's why you have that massive funding on the other way. And what happens? They end up getting burnt. So I understand that completely. It makes sense. And basically, if that's going to continue, this isn't enough of a sign for me, of course, to know, and we're not seeing like these huge spikes where people are crazy and adamant like they were at these tops. But if it does continue, let's just say price meanders in this area and you start to see people continue to stay bullish, hey, price discovery type stuff, right? They're going to take it lower if they will. Obviously, if they can burn some money, why not? They know that spot will follow and weak hands will be shaken out, etc., and that makes perfect sense. So we'll keep an eye on that. All right, so that was just basically one. There were signs, right? We understood that. Nothing surprising. I do hear that people talking about, hey, it was surprising. Nothing surprising happened. A descending triangle that had bearish price action broke down. That was understandable. The more surprising element would have been what if it showed a sudden bullish element out of the blue. The bull scenario would have been, just in case it ever happens in the future, it would have been a situation to where you don't break back down and start to build up, almost like you've seen kind of in this situation here where you basically are, even here, it's hard to see now when time goes by a little bit, right? But these type of things, these are like sign of strength. You couldn't break down, thinking like, all right, we failed, we didn't make a higher high, oh, look at that massive bullish engulfing, it's terrible, and then suddenly prices kind of just marching and marching and marching and marching, and boom, right? So that's how you take out the last end of supply. So typically it's going to look something like that. Now the scenario we're looking at now is very different. That would come in the way of a hunt where someone is just ruthlessly buying and gathering a hodl position. If that's the case, I don't have any insider knowledge of that. I see some people talking about, I've been speaking to whales and they say this and they say that. Again, that's kind of how I started this meeting. I mean this particular stream, there's nobody getting on a call with each other and saying, hey, here's the master plan. Satoshi just rang and he told me if we need to, he'll go ahead and send in 10% as well and make sure that everything's good. I mean, it doesn't, guys, it's not that way. It's a hindsight type of scenario, right? In hindsight, that was smart money. In hindsight, this is what the whales did, right? They didn't have a predetermined plan. Now, can some people get together and make some predetermined plans? Yeah. And do I care? No. So be it. It is what it is. So now we've seen that 5 minute, right? So just switching gears back to this low time frame. We did see, we talked about this when we started the stream, which is like, all right, so now this was a little bit of sign of relief, right? It bought itself some time, right? So suddenly this isn't an overbought scenario anymore, and it didn't dump out, right? So we showed that example, dump, 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 and then said, nope, you bought yourself a little time, so let's see what it can do. I believe this is like the daily open close, so same scenario. We're coming up on an interesting spot here. Uh, what do I do in that situation? I'm gonna look at a higher time frame. Might as well do this in real time. All right, well, this guy is extended, so that's the problem. So now what do we have to see? You're going to have to see this guy burst like pretty quickly. He needs to leap if that's going to occur. He doesn't have a lot of time. He got a little refresh here. The 5 minute gave him a reprieve, right? So you saw the 5 minute resting without dumping out. So this will try possibly to get a little gasp of air and go for it, right? That's kind of how it has to work. If not, he's going to have to cycle back down again, restart that process. Some of these moving averages try to get into alignment with each other and go again. That's kind of the mindset. Now, if we go into I will bring this moving averages back again, because basically you're in this situation. This shows us again where the weeklies are. The only time that matters for the week is at the end of the week, right? So we're going to be in a position to where this was the 34. I mean, man, closing under that would be even far more bearish than closing under this 21. So I mean, basically in that situation, we lose this on close, then this is my target. By the way, you can get to this target this week just by the price action alone of what's happened. I mean, ultimately, you're going to have another target. I'm not going to go into that right now. It's not really necessary, but it's pretty simple to kind of go back in time and look at how things were progressing on the upside and basically see, okay, well, here's what the targets were. But in this case, we're literally hanging out around the 34 week, which is, it's going to be a moving target intra-week. But this is a pretty good idea, and you basically seen that it tried to hold a little bit, right? It dumped under, grabbed it a little bit, held it, dumped under, reject, reject, reject. This is a very normal type of action. Regained it. Let's see. And you would be shocked that it works that way, but it does. You see this even on the weekly scale, basically holding that particular level. And if it can gain, again, what you'll see if you end up having the breakout that we spoke about earlier in this particular thread, that would be a stretch, and that stretch needs to get back the 200s, that 21 week, etc. It's a hell of a task, right? So we're not going to say, hey, it's going to happen, or this is probable. Holding the 200 would have maybe kept that dream alive a little bit more. It's absolutely on the table until the week closed, because until then, it's a wick scenario, and we see gigantic wicks all the time, so it's very possible. Just not significantly probable as it stands today. If you ask me again, if we end up breaking this top side of this range, has become more probable? Yeah, of course. Then you have a legitimate shot. But right now, we'd be talking about taking a leap before we even broke the range. And at the moment, as long as you're in this range, especially on the low side of it, you become dump susceptible. We're a little bit out of that right now, I think, right? So we're in a decent spot as it stands. I don't know where I put my range here, but just to give you kind of a recap of that one. Nope, that's not it. Anyway, I believe we were talking about somewhere on the low side over here. So at the moment it's good, but pretty simple there. You're just taking a Fibonacci of this most recent range, which I'll give you. Rough estimate, wrong way. Top to bottom. Not sure why that's happening. So this is the range it's set. So obviously, if you're down here in the 80-200 range, man, that's going to be real scary. You're going to be in a tough spot there. But we can also go in and look at a couple things. That last gleam right there is probably a decent spot for the whole leg. This is subjective as well, so I fully understand that you guys might utilize something different. You might even take 3 of these, right? So that would basically line up with this 8,500 number. This is kind of a spot that it's dealing with right here now. That's why I would probably, if it's going to break through that range, kind of leap up a little bit if we get that. But you're in a situation to where you're watching this because anything under that is susceptible to those dumps, as we mentioned. So it's a much safer zone just to be up here in general. And then, of course, we can also take a third one if we just look at the leg itself, which I would classify as, let's say right there. I mean, it doesn't have to be perfect, but pretty close here. So still same type of scenario. I mean, I don't even need this one. Anywhere under 8,500, you're in a danger zone. If you're in a position to where you're living back under, you don't want to go near this, right? This is scary. Can it bounce? Yeah, if someone has a massive buy back there, down there just waiting, then God bless them. It can look very scary and go from there, but it's not something I would want to play with. And I'm just trying to think if there's anything else I need to give you guys. Let's see where we're at. Oh, yeah, so we're talking about the signs. That's right. So something like the 5-day, right? Man, I know I showed this to my guys as well. We had this situation. I'll just clear all this for a minute. I can get rid of this as well. You know, right here on this candle, I don't look at the 5-day. It's not like I'm like, hey, what's going on with the 5-day? But it's not like I trade the 5-day or anything along those lines. It's kind of an awkward number, right? But I do look at it. So I was kind of just looking through and happened to do it right on the close of this particular candle. And sure enough, man, you set a bearish divergence here, an RSI bearish divergence nonetheless, right? Oh man, you end up setting these divergence on RSI on a 5-day scale, man. It looks shaky. So this was one of the big like, oh man, this is rough, right? Because at this time we were talking about different options of, hey, you know what, the bull scenario would still be okay if you are above 10.6, 10.8 in that region, etc. And ultimately, what ended up happening, you set that divergence, got weak, set that divergence on that scale. Again, it's not even something I'm saying anyone should look at, but it did give that divergence, and it was pretty clear. And again, that was another thing, another sign where we said, oh man, that didn't look too good. A bigger one, though, would go to something more traditional, obviously like a weekly scale, right? I'm showing you one that was a little bit odd there, of course, so I'm not expecting anyone to look at it. But this weekly, right? We closed this week, last week, at a number. Let me give you the number. The stochastic, this regular slow stochastic, 37.34, okay? Now let's just put a little line at 37.34, which is right there. Now, we already knew very clearly that this doesn't have to be perfect. Well, let's just make it perfect so we don't have any issues with this. 37.34 was the close. Boom, boom, boom. And look, again, we knew 10.2 or less was dump susceptible already, right? So that was the main clue of everything, right? So what am I going to show you, though? So bear market down here, bull market up here. If you don't believe me, I can show you the price action. Bull market, right? Bear market. So what do you notice with that particular line that I showed you? So this is where the close was. Really, there's another line right here above it. So now focus on the higher line. And what do you notice? In the bull market, we had never seen a stochastic weekly close sub 40. 40 would be considered the bearish control zone, right? So this guy did close at 37.34. That was a strong clue, right? It was, something that, hey, something's awry, right? So it makes sense for the dump. Again, does that mean you can't have just the most awesome bear trap ever in history? Yeah, but it's silly then to just say, hey, I'm calling that. Even if you did call it good for you, but you're going to come off a little strange, basically, even if you're right. So it's not something that you just do because you're in a bearish position. You're basically saying, hey, we're absolutely going to fly up about $800 soon. And again, if it happens, I'll try to play. I'm literally trying to play. I only took a couple shorts here, and I have a little long going. So I have 3 plays in total, and I'm watching the long like a hawk. But the idea here is that, and I'm on the wrong screen, sorry. I'm looking at my other screen. But the idea is that we're in a situation to where I want to try to play on a low time frame. I'm not going to change my life for it, right? So my wife is going to divorce me if I'm sitting here on the computer at night. But intraday, I want to now have exposure myself. Don't do that if you're not a pro, guys. But if I'm going to look for that weakness that we talked about earlier. If I can, when it's necessary to have downside exposure, I'm going to. When I see the possibility of some of these low time frame garbage type runs, I'm going to try to jump in. I say that because I'm not a big fan of low time frames. Respect anyone that trades them. Trust me, I have a group of friends that these guys are legit, right? They're trading daily. I love it. They motivate me a lot because I see it. And they trade, 10, 15 trades a day where I might do, unless things are really flying, then I do a lot. But in a normal situation, I might do 3 or 5 a week, right? So it motivates me, keeps me motivated to see, like, all right, look at the young guys. They're doing it. That's awesome. And it keeps me wanting to do it as well. So the idea, though, that I'm bringing up here is that I'm in a situation where I do want some exposure each way, just in case. So far, I've been able to time it pretty decently. Again, that would be my plan. When weakness shows up, I want to be on the short side. It's just that if you get into a back and forth, you don't know what you're doing, you're going to end up losing a lot of money. So just be smart. Those are tight positions for the most part. If I'm fortunate enough to get a little bit of a run, I might give it a little bit of room because my real key is that I don't want to miss out on a larger scale move. Also, I certainly don't want to miss out on a larger scale move to the short side, and that might happen just for the fact that I'm not going to be watching it 24 hours a day. But because of the fact that I do have like a hodl position, I would like to hedge that more if I can, but if I don't, that's life. That's my decision to hold like a long-term type position. That's not a forever hodl. I don't think anyone should do that. Basically, if things get ultra weak for some reason and we start to see something that is real ugly, we don't need to talk about that today. Then of course I would be hedged during that time anyway. So the way I manage it is by hedging, ultimately more than anything else. I'm not looking to sell that specifically, and there's a lot of reasons, tax implications, etc. So everybody has their own situation. Other than that, let's see. We saw the signs. I went over the weekly. We talked about, D3. I don't know if I went too specific on this, but I will tell you that the 3-day, for my guys that are in here listening, they know I've been talking about this. This 3 days been just ugly and weak. It had a different look to it last week, right? So last week, I can cut it off. We basically had a situation where it was like this. So this is hindsight stuff, but I can assure you we talked about this last week. And it was pretty simple, man. There was nowhere to go. If it broke up to the upside, all right, good. You could party a little bit. If it was going to go down, it was going to be pain, right? So we knew that. I don't know if maybe I have that somewhere. I don't think I do. Let me go. Well, I'm sure I could bring it up, but it doesn't matter. Just take my word for it, unless I can find it over here. Anyway, got too many to look for. Anyway, I'm good on that. I don't want to waste too much of your time, guys. Let me see if you had some questions in there that made any sense. If you have a couple questions that are really relative specific to what we're talking about, I will go ahead and answer it. I'm looking. I think we covered a lot, but I'll take 1 minute. So forgive me if I bore you at the end here. Okay, so nothing too specific, but the idea is this, man. There was just a trend. The volume was going down. We saw that the momentum was going down. Price has to find a place where it can do business, right? So that's pretty normal. Let me get a quick drink. And that's what happened. And ultimately what you could see, you bring up something like just basic volume. Obviously that's increased significantly. I mean, you know what happened. So that's all it's about. You need to be able to transact some volume. And safe to say that if you look at relative volume versus what was going on for quite some time, I mean, this was tremendous. Even now with what's going on, you're seeing a lot more. Now, you were seeing some spikes here and there, but more to come, right? So good question, again, would be where we headed. I'll recap that before I go, right? Since I'm not seeing a lot of specific questions. The recap is this, man. Pretty simple. Ultimately, if we are seeing any type of weakness, we want to roll with that weakness because we're in a bear trend. Now, at the moment, we see some spots where the bulls might try. It's understandable. H1 is trying right now. If H1 can get something going, right, it's clear that, first of all, let's look at H2 before we go to H4. But it's pretty clear that, look, H2 has a fairly decent setup as well, right? You are getting a little bit of that flattening setup. This is not so bad, right? This is okay if you start moving up. But you can start to see that momentum trending that direction. So just imagine half the strength of this is H1. Any upward momentum it has is going to scoot this guy up. Now, this one has a long way to go, right? Because we moved this around a little bit. I mean, he's really buried. If we go to H4, similar situation. They're actually lining up pretty well. So if you did get a jolt, right? If you got that jolt, then you have the ability to at least see some action here. And what would that represent? I'll kind of just give you a brief understanding of some of this. So when you see some of these little jolts in here, doesn't mean it's going to race off and go somewhere far. No, but you could see this type of cross on a 4-hour scale has the ability to give you some decent movement. I mean, this one here was, 9,700 to the top of like 10.4. So that alone was a pretty decent spot. So if you get if you get the time frames moving together, right? So something like a 15-minute expands, that brings the 1 hour, that 1 hour brings the 2 hour, 2 hour brings the 4. Then you have people that trade multiple time frames all looking at the same thing, thinking the same thing, and they start to move this thing. People that decided to short here might cover, etc. If there's not that many of them, but if they're there, that can happen. You can have some shorts that are buried. They can fuel the fire a little bit, and that's how it would happen. Again, I don't want to sell that dream as if it's definitely going to occur, but you can see the setup here, right? I mean, forgetting the fact that they're all inside candles because that matters, right? Not only do you have all of these as H4 inside candles on the low side of the spectrum, which certainly isn't bullish, all hanging basically at or below this 8,500 number, which is not the one you want to be at, right? You're in a situation to where you could say, all right, so inside candle, inside candle, inside candle, inside candle, inside. But on top of that, within that structure, and it does matter, you do have 1, 2, 3, 4, 5, 6 candles inside of this one. So again, whichever side this guy peaks out is going to most likely win that scenario and have a pretty sharp move one way or the other. So that's what we'll be looking for. We don't have to get too complicated beyond that. As far as time to buy, okay, so again, if I was buying, I want to ride like a low time frame position into something on a higher time frame position. So again, being, again, I don't normally suggest people to trade M15, the 15-minute chart. But if you needed to get involved in something, yeah, I would start on that time frame because it's going to limit my risk. What do I mean by that? Well, if you go down to this time frame, you see a formation, and you say, all right, well, I established, maybe you like the formation, and you see this long-legged doji as like a possibility of a local low. The moment you take out the high of that, all right, well, you might have been long, and you're trying to ride it into a higher time frame type of trade, right? So you're assuming direction when you do that, and that's okay. It's okay to assume direction. Just make sure you understand your risk, right? So in that situation, you might say, I'm setting my stop here. Really, your stop's probably on the break below this particular area, but for your calculation of your position, you want to put it lower just in case there's slippage, right? In case you can't get out very quick. So you'll calculate your position size based on a lower number. You'll actually be tighter with your stop because the reality is you're talking about a directional trade, and if price comes back here, you were wrong, right? So just swallow it. It's okay. I don't mind it coming here, me selling, it flattens out, starts to go again, and I enter back again over here. Life happens that way. It's not about getting in at the perfect spot. It's about limiting how much money I lose before anything else. That's the most important thing, is that I limit the amount that I lose first, right? Now, I accept my risk before I begin the process, so I know, all right, well, this is how much is at risk, right? All right. So you say, hey, I'm going to lose $2,000 on this position, right? Okay, you calculate what that would mean for price to hit right there, and how many contracts or wherever you're trading, how much spot position that means and equals based on your direction from there to there. I have obviously things on Twitter that can help you calculate that. You can find them everywhere as well. But the idea is you made that decision beforehand, right? Whatever, $200, doesn't matter what it is, 200, 2,000, whatever it is. Basically, you make that decision first. It doesn't mean you're going to let it go all that way. Obviously, you're thinking it's directional. So if you see this thing peel back down, oh, you were wrong, this wasn't a local low, sell it, right? So if you can get out, just get out. But ultimately, and then maybe wait for that setup again. If you did that, here and there and there, and then it eventually went, okay, life, you're gonna survive. It's not, you're gonna basically come out ahead in that situation as long as you ended up with the correct direction. Where you're gonna go wrong is trying to convince the market that you're right. If you say, listen, market, you're going up, and it says, no, I'm just gonna make it a little lower, and you go, I'm not worried about it because I know eventually it's going up. And what's gonna end up happening is, no, you're gonna bleed out, and you're gonna go to this next stop way down here, or you're gonna panic sell it into some drastic sell-off and put yourself in a bad position. Okay, so just be very careful with that. I would start on something low time frame, but you don't have to do that. Like I said, you could wait. Just sit back, wait. It would be nice to regain the daily open, right? So that's about that level there. That corresponds with everything else. So transacting business above that level might make sense. And then if you lose that level, you have a nice tight stop and say, hey, I don't want to mess with that anymore. That makes perfect sense. You see it basically tried to hold this level before. It was relevant. We talked about that 0.23 of the whole range. So you want to find some spots that make sense. If you try to find something like a moving average, so be it. But again, understand that you do have some dynamic resistance. It's not fake, right? So I mean, we go to this low time frame stuff, and you say, well, that's not going to matter. Oh, really? It's not going to matter? Interesting. So you came back, you start rejecting here, you have a hard time below, reject down, come back, try to fight it again, reject this 55 down, reject again, finally it pushes through. So again, understand that these down sloping moving averages are going to cause a problem. You need to get them on your side. So when you start seeing them level out, and I'll go to the 5 minute as an example again of what just took place recently, it was trying to level these guys out over time, and then finally, all right, better position. Enough people have the mindset to go for it, and they were able to get them, and that's where they're at. They still have some other challenges, etc. But ultimately, you have this very low time frame. Imagine that everything's banking on a 5 minute chart at the moment, right? Or even below that 1 minute chart. That this thing better not break down again, because yeah, probably if you lose 8,300 on the 1 minute, it's not going to be the prettiest formation, right? Especially if you come down and you reject that on the 1 minute, pretty sure you're going to have a nice little play there, right? What would that look like? So that would be something like hanging out above it, come down, reject, and then look at this. It dumps out another 150 points. Now it's a 1 minute. So $150 on a 1 minute. That was a pretty damn good trade. Hopefully you guys understand that. All right, that's it. I think I don't want to overextend my welcome for you guys. I just wanted to pop something out there since we had an interesting one yesterday. I see some of your questions. Like I said, if you have some questions about learning TA or anything along those lines, just talk to me on Twitter. Bump me a few times. I'd much rather have a conversation. It's very important for me to have more of a relationship with people and make sure that it works for you and get the right type of person in, because the people that I do have are like I said, the most helpful, coolest people I could have ever imagined. So I'd like to keep it that way. Other than that, though, I'm going to continue to do these type of videos, so it might not even be necessary. If you're just looking for things like updates, I figured, you know what, I can do these type of updates in here and then get into the nitty gritty with my members and do that differently. So I'm going to check out for now. Hopefully all is well. And stay safe out there. Be smart. One last thing I will say is this. You can wait out the whole pattern, guys, right? You can wait out to the end of the week and just see where we close. Do we close below the 21? Do we close above the 21 week? That should give us some element of directional bias. I'll be happy to do another video at that time as well. I'm sure you got some other guys you can trust as well that you can look into and kind of get an understanding, because that's what we want. We want a directional bias, right? So if we can take a directional bias and now go to a time frame that we think we can understand a little bit, like there's no doubt that the market was very bearish, right? No one would have looked at this that I know and said, oh, that's just an awesome bullish formation. So if you were on a 1 hour and you had the directional bias of this being bearish, you should have only been taking shorts until a bull showed itself, right? Otherwise, it was a very low time frame, right? You have to understand time frames, guys. You know, most people have no understanding of time frames and how to utilize time frames, etc. Because the only long that you would have been looking for would have been on this very low time frame garbage like this, where you say, all right, I'm establishing something, and then I went, right? Way down here. And I know that the vast majority of traders don't have any concept. They understand that, yeah, 5 minutes a 5 minute, 10's a 10, hours an hour, but they don't understand that there's legit rules to trading as it relates to time frames. And if you have an understanding of these trading rules, then you're not going to be binary and have a 100% success rate. But what you are going to do is you're going to put yourself into a position to where now you have an edge, right? Or at least you're on the path to an edge because you have the knowledge to now work through it, sharpen your skill set, and then eventually you can create wealth as long as you live. So it's a good thing. Anyway, interesting formation here on the 5 minute again, so I'll leave you at that. We're basically getting a little bit of a flag here, so we'll see how this plays out. See, we got this guy now. We talked about this. I'd like to see how it developed. It looked interesting. It's not the prettiest, but you are getting a little bit of a formation up here, so I would say this range now matters as well. We'll see which way it plays out. Hopefully all is well. If you guys have some questions, go ahead and drop them on Discord for me, for my guys, and I'm going to jump over there and answer them for you. Hopefully all is well. We'll talk to you soon. Take care, guys.